Hey everyone, hope everything is going well. Alrighty, so I'm over at ElliotWaveTrader.net and I look at Avi Gilbert a lot because he uses sentiment. He also uses Elliott Wave. And now some people ask, like, where are we in, the wave structure? I can't tell you because I am not well versed in that. I know that there's, wave, are we in wave A, wave B, wave C? I've seen them talk about it, but I still haven't looked into it in depth. I just look at it as, hey, look, these guys have a way of analyzing the market. I'm going to listen to the experts in that field as curiosity. Now, I'm looking at what Avi Gilbert's saying. And he says sentiment speaks time to fight the Fed. Rates are going lower in 2023. I agree. Rates will, in my opinion, go lower. And he talks about a little bit of where he talked about over a decade ago that he thought the dollar was about to rebound, and it did rebound. And it was using contrary analysis, right? He goes against the grain when the evidence comes about. And now, what he's saying is he's giving some parameters, okay? He's saying there's a larger degree of support at 98.50, and as long as the pullback remains over support, he thinks there's going to be a pullback, which makes sense, right? Because I talked last week about, hey, the dollar's most likely going to rally and the gold price is going to go down, right? We've seen that. And now you could see a little more of that in the coming, weeks ahead. But he's saying that as long as this pullback remains over support, then takes out the high struck in early December, then that would likely be the signal we are on our way for the first target in the TLT in the 120 to 125 region. I would not be surprised. And this is important. Now let's consider how many times the Fed has raised rates since the TLT bottom in October 2022. Yet the TLT has continued to rally 19% plus during that time. Moreover, it is quite likely that the market will push TLT to continue to rally in the coming months as long as we hold over the support of 98.65, despite the Fed still indicating that it will continue to raise rates. Ultimately, the Fed will stop raising rates in the coming months as it will force again to follow the market. History will repeat itself again. All right. So that's his opinion. I wanted to look at, some other information that I look at. David Brady, he's over at Global Pro Trader on Twitter. I really like his work. And he says all you need to know is the aggregate Treasury futures net spec positioning. Look at how record short they are in the futures market, right? When you have the record short, I think this was a graph from Zero Hedge, right? That's what it looks like. But if they're the most record short, we're talking about hedge funds, right? Me personally, I can't tell you what to do. I would bet against it. I would be buying the TLT. I cut back a little bit on the TLT, during, this pullback. I still have some positioning, but I think I'm going to add a little more call positions out there because when I see the hedge funds act like this, and while I understand, the trend is your friend, right? So they will probably short bonds for a little bit more. And once they do that, in my opinion, from a longer term perspective, the next year or so, I expect bonds to rally. And in turn, when bonds rally, what ends up happening, we've seen this, right? Stocks should probably go higher, in my opinion. You should see gold and silver, in my opinion, should rally. And crypto, in my opinion, should rally. Collectibles that I'm involved in, sports cards, should rally. And I think the sentiment's going to change and there's going to be green shoots, but these green shoots, I'm not bullish really long term. And I've stated this 2024 is a year that I want to be start to liquidate some of my portfolio, start to pay off some of the loans that, I have to pay off, and get ahead of that. Once your account is in a strong position, you pay off some of the debt that you have. So you borrowed money to repair some items, or, if you have car loans, student loans, you want to pay a little bit of your mortgage, you do so when your account is in a strong position, right? So that's where I'm leaning at right now. Anyways, I wanted to leave my thoughts, or I wanted to hear your thoughts, how you're playing this if you are looking at the bond market. Anyways, remember to smash that like button, subscribe if you haven't, and comment down below, guys and gals. Thank you. Bye.